Good morning, traders, and happy Friday. It is Friday, the 15th of May, 2015, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Very light news flow overnight. There's a strong close on the U.S. yesterday. I commented on that on Twitter. My comment yesterday on the close was that the formation that we've created, and we'll look at that in a second, gives us a very, very high probability of breaking the all-time high, 21.1975, for a continuation. It looks like the auction did not complete itself on the upside, and so it went to 21.2275. Again, strong close in the U.S. markets yesterday as a result. Has resulted in a rising tide effect on Asian and European equities with a lack of pertinent news flow. The German Bunds taking the lead from yesterday's lackluster PPI. Expectations are for the Fed rate hike is probably lower. Yesterday's PPI data has provided a strong case for the Fed to hold off on interest rate increases. The market responded accordingly by rallying. U.S. dollar printed a 3-month low yesterday and has started to drift back up. So we're seeing a drift down in the euro and the opposing pairs. And then finally, dealers are noting that Greece is entering into a critical period of its extension negotiations for bailout. It was said that Tsipras, the Prime Minister of Greece, is looking to take over the negotiations because the current 4-month extension ends on June 30th. And it is said that it takes 4 to 5 weeks to ratify an agreement with Greece in the national parliament. And so they're entering into that critical time zone where they need something to move forward with this. So we're going to hear more on Greece. More and more on Greece again over the next week or so, I believe. Looking ahead at the market, at the economic releases, we're expecting University of Michigan sentiment preliminary. This could be a mover. Expecting 97 at 9 o'clock Central. It's a half hour after the cash open. Again, University of Michigan sentiment prelim. Expecting 97. The consensus range is very narrow, 96 to 97. So anything outside of that would be a surprise. And then looking ahead, we have very little left. Baker Hughes at noon, and then tick flows at 3 Central, right at the stock market close. We're looking for net long-term tick flows and total net tick flows. That's a minor release. Other than that, we have a clear slate for today. Not much happening. Let's take a look at what we did yesterday, what was expected, and where we ended up. It's very important to review how our expectations were met, how the market met our expectations, I should say. And then so we can devise a plan for today and look at what hypotheses we have. Yesterday opened out of range. The primary expectation for yesterday was for a responsive selling early on, potentially as far down as 2100s, what I said. But looking for responsive selling, looking for chop, and then looking for 2110, 2111 tests and a potential for new all-time highs. And that's exactly what we got. Hypo 1 played out perfectly yesterday. Pushed to 2109 quarter, then rotated down to 2103.50 to put in the initial balance low, and then we had a large rotation into 2110 and then 2111. We held 2111. This is the MC point of control that comes from back here. This thick black line, it is the balance of these 2 days right here. And so we sat there for a while, given the large rotation, given the fact that the IB was being set up. There was a very high probability that this is likely to break. It did. We went to 21.1350 on the dot. That was the next expected price. 21.1350 is the last high in this area. Above that, 21.15. So we got to 21.15 here. We stopped a tick short for a little bit, and then we continued to push. Interesting profile, pretty ugly profile on the day. It looks like a pipe wrench. We'll call that the pipe wrench formation. It's a double distribution with a fair amount of trading in between. There was really no consensus on price yesterday. The market participants just could not move high enough or even low enough to have an orderly shut off of buying or selling, fairly abrupt. So what we had down here is a fairly weak low. But then when this rotation came in and took us above the OS, we pretty much were set for a rally, and it was just a waiting game. I know it's tough for a lot of people to just sit through all this noise, but it is what it is. And then we finished the day by shifting the point of control right at the half hour mark before the close, and we did a whole lot of trading with a very poor high. So overall, we don't have any once the way the auction is normally operating is that it moves higher and it sees less and less participation by one side, and therefore lesser and lesser volume, and then it's forced to rotate down, test through the high volume node, and test the other side until it cannot find participation on the buy side. And so on the sell side, so buy side shut off on the high, sell side shut off on the low, and the market creates somewhat of a Gaussian or a bell-shaped curve. Yesterday, despite all the selling that occurred in here, buyers stayed strong and kept pushing through. So let's look at the overnight session. The overnight session almost immediately went and tested higher on the Asian Open, sat sideways for most of the session, and then took off as it has done consistently with the European Open, pushing to the new all-time highs in the overnight, 21.2275. Very poor high. The profile here is skewed to the high side. It looks unfinished. However, we are above yesterday's close, yesterday's range. We have a small gap up, so the expectation is for this volume here, which was not too great but not too low, 139,000 traded so far, 139,744 traded so far, and that's likely to be to show that the overnight inventory was long, and it's likely to balance itself. So the expectation this morning, given the story, the expectation this morning is for it to rotate back down. Probably will retest at 1975, but I think in today's session we're likely not to see that high right away. We're likely to rotate down and come back as far down as 21.11. It's likely to be a noisy open. We're against all-time highs. What does that mean? It means that both sides have reason to participate. So you have people who might panic out of positions, or institutions that might push out of positions or hedge short positions by buying futures, and you have those who see this as reaching its target and may want to sell. So we're likely to see intermediate term higher time frame in play this morning, which means that the open is likely to be somewhat choppy, so be cautious. But overall, based on yesterday's profile, looks like we have some decent opportunity setting up. The profile gives us a clear point of control, a second clear HVN at 21.10 with a clear cutoff at 21.11, 21.11 quarter. Plenty to play with here against all-time highs. I want to remind you again that our targets above are 21.23 next, 21.29, and so on. There are some measured move targets that I don't have that chart up, but let me scroll back up in our chat room because I posted them yesterday. Let me grab those levels. So I have the key levels above this 21.20 target that we had from last month. Key levels above 21.29 quarter, 21.41, 21.59 quarter, 21.70, 75, and 21.74. So we have some cascade of levels, but they're quite wide apart, 12 to 17 points apart each as far as targets. And again, new all-time highs, so no volume, no profiles, nothing. So we have to rely on projected targets to see where the market might see a reaction. We got a reaction just a tick short of our 21.20 targets, so they're fairly effective, but just like everything in the market, the outcome for each event is cannot be better than 50-50. A quick look here at the notes. The notes have been pulling back, so we see the notes here falling, yields on the 10 years rising, but today we have a gap up. So those of you who are trading the notes, take note, no pun intended, of the fact that we are gapping up in the notes. It's likely to push back towards yesterday's range. It stopped 4 ticks short of that. So far, the pit session opens at 7:20 Central, and that's what I'm tracking, and that's how I'm seeing this gap. But it's been balancing down on the low side. The notes have been balancing down on the low side here for quite some time, with most of the volume occurring right in the 127.20 area, and it's likely to test this from above today. So I'm watching out for that. There may be an interesting trade there in the notes in case you trade them. Real quick, crude oil still balancing, but if you look at crude oil, the bigger picture, it has come back into this composite zone here from the past. This is carried over from a couple months ago, and we've gone as far as to test the MCLVN $62 or so, 62.98, something like that. And by pushing here on a week ago, Wednesday, we pushed to 62.58 and have pulled back. But generally in crude, we're stuck in this high volume node and are balancing. I still think it has upside. I've been talking about this all week. I think crude is likely to continue to march higher. Next target up is around 65.15 or so before it hits the next small, very small volume node at 65.56. But the overall resistance in crude, or the key area where selling is likely to stop, is around 78. I know it's sounds like a long shot from here. It's about 25% increase, but that's just the way it looks. I'm a trader. I'm not an analyst. I have to look at what the chart says and what the participants are doing, and decide based on that. Unemotionally, I have no need to be right or wrong. It just is what it is, as much as possible. Looking at another product I was asked to look at, the euro. The euro is interesting here. Of course, it's been rallying with the dollar drop. The euro has returned back to its key balance zone that it had from the beginning of the year, from January, February. And the cutoff point for this is 115.15 on the upside and 111.07 from the downside. It's stuck in the middle. The point of control for this balance zone is around 113.65, and that's where we are today. We're trading 113.50. So the euro looks like it is balancing. But it still has an impulsive move that is likely to continue higher. So for the short run, the euro is likely to pull back and balance for a little bit. but overall it looks fairly strong, and it's looking like it's likely to continue over the next continue higher, probably in the next week or so. That's all I had for you for today. It's 8:15. I just want to remind everyone it is Friday, as I always do. It is Friday. This is a good day to be patient. It's a good day to be aware of your state of mind and where you are with your trading for the week. Pick your spots. Again, as traders, we trade the probabilities. We don't trade anything else. As soon as you feel that your emotions are getting into the trade, as soon as you feel like, damn it, I should have made money on that last trade, you're starting to walk into an area of your psychology that is difficult to control. So be very aware of where you are mentally. Trading in fear is probably your largest obstacle, especially if you have low confidence but due to losses, or for people who've hit a streak and got overconfident, and then the market hammered on them because you just gave too much, gave yourself too much credit. It's just important to just focus on the story. What is the story saying? What is the likelihood of one thing occurring over another, and trade from that perspective. Trading from any other perspective is a losing proposition, in my opinion. So keep it at that. With Friday being the end of the week, it's just not fun going home knowing that you just burned a big hole in your account. So just take it easy today. Pick your spots. It's not a good day to get very aggressive. I don't believe, in my experience as a prop trader, also prop owner, and having been around professional traders for the last 15 years or so, it's hard to have an all-time high on a Friday. Friday generally is not the day for all-time highs. Friday is more of a grinding day, just as Monday is. In fact, I have some statistics on that, but it's not a good day to push. Just take it easy and stick to your plan today. And if nothing materializes, it's good to start your weekend early. Good luck to you. I'll catch you on Monday. Take care.